Hey everyone, it looked like I had some audio issues. So, welcome again. Welcome to I believe it's the 65th day of 90 Days of Facebook Live. And today I wanted to talk about what happened with the whole taxes with Beyonce, right? You may have already read the articles. Of course, it was a pretty big headliner about why she owed the IRS penalties and interest, and it had to do with charitable contributions, right? So, charitable contributions are allowable. Are part of allowable deductions that you're able to have. And so, a little bit of a fun fact, like Jay-Z and Beyonce, they file taxes separately, even though they are married. But just a little bit of a fun fact. And the reason why is because they are both high income earners. And I'm sure it's like you need to pay what you pay and you pay what you pay, right? So I think it's just they probably exceed a lot of thresholds to where uh like they wouldn't have a lot of benefits. So they probably just file separately. I wasn't here to talk about that. But talking about Beyonce's taxes, one of the things with Beyonce's taxes is the fact that it was dealing with charitable contributions, right? Some things that the IRS did not allow, and she's basically filing a petition to take off the additional tax and penalties because she acted in good faith. Those taxes are those carryover deductions are from the past years that she was applying to these particular years that she owes for. And so I the thing is that when of course whenever people, you think about Bill Gates, right? All of them have foundations, right? All of them have nonprofits and charities that they give into. And so it does provide a pretty good tax breaks. But let's talk about how it can affect you, right? And how you can take advantage of this type of deduction, so that it can benefit you tax wise. And so when we look at how charitable contributions are deducted, right? How they're able to benefit is that there are two types of major deductions, whether if you are married or single. The amounts are based on that, but there's something called a standard deduction that is automatically taken off of your taxable income. So if your total income, adjusted gross income, is $100,000, right, for the whole year, then based on whether or not if you're married filing jointly or single or head of household, there is a certain amount that you can automatically take out, and that's called a standard deduction. So there's another option you can take that's not a standard deduction, that is part of the itemized deductions. And the itemized deductions, it actually, if you have more deductions that you can actually take in the itemized deductions, then it would be more advantageous for you to take that. And so, the most cases when people are taking itemized deductions, so let's take, for instance, someone who's married, right? The approximate standard deduction is around $25,000. So, if you're married filing jointly, you're bringing in $100,000, you can take off $25,000 of standard deduction, and that will leave you with $75,000, right, of taxable income. With itemized deductions, you have the ability to actually go higher than the standard deduction. And so most people will be able to have deductions. Now, this is on a personal side. This doesn't even have to be on the business side. This is straight personal. What I've seen a lot is that, yes, there's a spike in interest rates, but I will say that there is a deduction, that there is home, like mortgage interest can be deducted, right? Mortgage interest and charitable contributions are the two areas that I see people being able to take advantage of itemized deductions. And then, of course, taxes, state taxes that you've paid. But the two biggest areas are mortgage interest and charitable contributions. And so, looking at charitable contributions, they're typically going to be religious organizations, they're going to be charities, and they're going to be qualified organizations to where you can give and actually get a deduction. Um, Contributions can happen in the form of property, and they can happen in the form of cash, right? And so there are different rules and stipulations when it comes to charitable contributions. And so when you're giving cash, let's say, for instance, let's just stick with the adjusted gross income, right? Your income is $100,000, right? I can give charitable contributions up to $50,000, right? So if I give charitable contributions up to $50,000, that is my limit. However, let's just say that I gave $75,000, that's 75%. What happens is that the IRS will limit it to, it is about 60%, but I'm just going to say 50%. So I would be allowed 50% of my adjusted gross income. And then what happens to the rest of it? Well, the rest of it is held until future years. It can't be used until future years. And so that's what happened with, uh, if I read right, now these are from reports. I haven't looked at a tax return or anything like that. But according to what the articles say, is that it was carryover contributions that have been disallowed. And so carryover contributions are basically contributions from past years that were disallowed because they've either reached a limit. Once they reach a limit, then you can apply it into the future years. And so when you are making charitable contributions, you can be mindful of that. Not that they will disallow it, but they'll disallow for that current year, and then you're able to apply it for the future years. And so um, she was definitely refuting that because, in good faith, she was disallowed some of her charitable contributions in the past that she was trying to apply in those years. But I guess somehow, some way, the IRS was like, "No, we're not having it." And she and her lawyers and her tax attorneys are saying, "No, we're not having it." Right. So that's the thing. So with charitable contributions, it's really great, right? It's really great. I there are advantages to that. Now, there are people who give and may not be able to take advantage of the itemized deductions, which that shouldn't be a reason why you shouldn't give. But you just want to make sure to follow. There are a lot of rules when it comes to charitable contributions, meaning, of course, the cash, the property. With property, it is the fair market value. It's not based on how much you paid for it, but based on how much it's worth now, right? So if you were to sell it, how much could you sell it for? So that's what the fair market value of that property has to be, right? You may have purchased this car for $50,000 and you've driven a whole lot of miles. And when you give it, you can't write off $50,000. You can only write off what the car is worth right then and there. And so that's why they say, they give you a letter, say, "Thank you for donating this property. Please consult with your tax professional in order to get the amount that can be written off." There are some questions. I probably get this question a lot from professionals, and I'm just going to answer generally. So if, for instance, if I were to donate my, let's just say, my accounting services or CPA services or something like that to a church or an organization, well, the thing is a lot of people say, well, if I normally charge my clients $2,000 a month, can I just make that a contribution because I'm worth $2,000 a month and I'm donating my time, my service time? And the answer to that generally is no, right? But what I can deduct are the actual expenses that I take in order to carry out the job. I can't write off my time per se, but I can write off if I have to use a particular software. I can write off the 14 cents a mile. if I had to travel somewhere for the church, I can write off any type of supplies or expenses that it takes for me to perform that charitable service that I am doing. And so it does go into definitely murky waters when you go into that. I think there was a case where um, well, I won't even get into that. I don't know how we got into that, but yeah, just know uh, if you are wanting to do charitable contributions, they're great. Just know that if you do reach up to that 50% limit or 60% limit, then that gets carried over. And so a lot of people don't reach that. Of course, that's something that, that is something that the wealthy do. Donor advised funds, that's something that's used as well too. There are some stipulations when it comes to opening up your own foundation, but if you feel led, nonprofits, you can open that up, but there are some stipulations that you have to go through, some loopholes that Bill Gates and all those people know how to get through, right? But donor advised funds is something, and also just giving, right? I'm a firm believer in giving. I'm a firm believer in sowing into charitable causes for sure, and even um, church. So big tither, not I won't say big tither, but I mean like I believe in tithing, right? So no matter where that is, I would put a line item for giving, right? Wherever that goes to, like that's fine. But I would put a line item for giving. I know millionaires, listen, I know millionaires that put tithing goals, right? They don't set they don't set this is how much revenue I'm going to make, but because they give 10% of their revenue, their top line revenue, they give that. And so they set I believe 1 million. I think they gave about like 200 grand. And so that if you tie that back to her revenue, that was $2 million. So set giving goals, right? That's going to be really important whenever you set giving goals. And um yeah, there's a verse in the Bible that says he who is he who gives freely like is blessed, but like if you're stingy, like like there really isn't a benefit of really being stingy. Now of course do got to be led by God and just know where to give, but I'm just a firm believer in sowing and reaping. It's a full principle. It's like a principle that you put into place. um if you sow sparingly, you will reap sparingly. Sparingly. If you sow bountifully, right, you will reap bountifully. I don't know why I use King James text, but that's what it said. I guess I just remember that, right? I'm like, what's the NIV version of that, right? But anyways, yes, in your budget, I would definitely set a percentage aside of giving, and um yeah, you'll just see expansion just within your money, that it's more than about you. It's about other people and what you can give. Now I'm not saying don't I'm not saying because you can't get a deduction don't benefit your time, like don't donate your time, right? I believe that one of the most valuable things you can do for um, a church, for a charity, is to donate your time, right? It is to donate your time. It is to donate time with whatever your passion is. I know that as being a CPA, there's a day where they call it the CPA Volunteer Day, and we have different organizations that we're able to pick from that we can actually just donate our time and really give to charitable causes. I love it, and especially when I worked way back in corporate, we used to have these big events, but it was all centered around giving, right? Giving to United Way. And so the thing is that one thing that would be pretty cool to do if you have an organization is to have a volunteer day or something like that, a volunteer week, to where you allow your employees, or you make it about giving, or you allow your employees to say, hey, whatever you give, I'm going to match. Like those are just some of the ways that you can actually ignite and spark a passion and a unity for giving. And so those are just some of the things, right? Those are just some of the things to consider. But in order for you to take advantage of charitable contributions, right, just like Beyonce does, is to, yeah, give, right? Just give, set goals. You can even set giving goals and different things like that. And I know at our church, Ignite Church Global, we do something called a generosity month, right? We call it a generosity Sunday. I love that, right? I love it. And you don't have to start big, right? Like, unless you got it, right? I mean, some people are called to give away cars. They're called to, like we had a friend that gave away his car. He bought a new vehicle and he gave his car to somebody. And there's just different ways that you can actually donate and be charitable and to just help those around you, right? Like, I don't know, find out a passion. Find out if you have a passion for kids or for teenagers or for women that are sheltered women, or if you want to help, Boys and Girls Club or whatever that is, because it brings so much fulfillment. Like it I don't know. Like I just feel like that's something that God has instilled in us to help other people and to really be charitable. So, anyways, that's all I wanted to talk about. And yep. So I love it. Yes, thank you very much. Yes, thank you for this invaluable information. Yes, thank you for tuning in. And y'all, let me know if y'all have any questions, statements, or anything like that. Um, hey, why not get some advice from a CPA, right? So you guys got any questions, feel free. And what I typically will do is address it here on a live. So if you guys got anything, we have like, I don't know, some days. I think it's almost, we'll just wrap it around to 20 something days left in this 90 days of Facebook Live. But this isn't my first rodeo. So yeah. So I just welcome all in any questions, and y'all have a blessed night, and God bless. Bye bye.